Okay, hello everybody. This is 7 January 2025. I'm going to bring a new segment in about bite-sized news, and it involves the following companies in case you're interested to listen: CICT, FCT, CLCT, and DBS. Right. So please note that I'm not a financial advisor. This is not financial advice. I may make mistakes and do not guarantee the information shared is accurate. Alright, so let's go to DBS Insights Direct. Alright, you can find this group on Telegram. Alright, so I'll just put the summary of what I think is important. Alright, I just also put the date of the sharing from DBS Insights here, 16 December 2024. Right, so they say suburban retail offers strong growth prospects as domestic outbound travel peaks while RTS concerns overstated. Right, so they're talking about CICT and FCT here. Basically, they're saying that for central malls, they feel like the tourist return in 2024 has already peaked out, so it will be a laggard in 2025 as tourist is downtrending. Alright, and higher SGD means that it's more expensive for tourists to spend in Singapore. Right, for the retail side, they say that retail space demand outweighs supply due to tight supply pipeline, with tight vacancies of below 1%, rental revisions to be sustained at above 5%. Right, so that looks good. Right, so they think that basically the suburban mall sites will do well. So this favors FCT more. Alright, so this is their forward yield, right, of CICT and FCT. I didn't check these figures, so if you want to take this, you have to trust DBS Insights. Right, so they talked about also the Singapore-Johor rapid transit system. Alright, so they say that at this point it's too early to be concerned about it, and this is something I agree with. Of course, it is possible that it will affect FCTs and maybe even CICTs footfall and sales, but again, we will worry about this when we get data, because I think it's just something that we don't know how the response will be like on the ground. Alright, so growth in tourist-dependent malls in Orchard will taper off as we continue to see tourist downtrading trend, and a still high SGD impede sales growth. Alright, so CICT has some growth built in because of the acquisition of Ion Orchard. Alright, but I think what they're trying to say is that probably not that great upside potential. Right, so that being said, we move on to this EV market thing. Again, this is from DBS Insights. I think it's also from 16 December 2024. Alright, yeah, the date is here. Alright, so basically they're talking about the fact that the Chinese market is likely to try to give more auto incentives for the EV market. Alright, and what this means is that it could be a positive for CLCT. Alright, because if you look at this this picture over here, this is from CLCT's first quarter 2024 results last year. Alright, so if you look at what contribute to their first quarter's very good results, is actually services, and is contributed by electric vehicle sales. Right, so if there's more auto incentive policies, it could facilitate a faster shift into EV space, which means that this part may be boosted higher. Right, this is the 9-month results for services. You can see the big drop. Right, so clearly this one I think is due to government intervention, which is a possibility. I believe they expect it in first quarter 25. Alright. Finally, we have banking. This report is from OUB Kay Hian, dated 6 January 2024. Maybe the explanation for why today the banks are actually shooting up. Alright, especially DBS and OCBC, I think. I'm not sure about UOB, I didn't check its price. Right, so anyway, they project that DBS could declare special dividends of 50 cents per share in fourth quarter 24, which is the upcoming quarter, and fourth quarter 25, and increase quarterly dividends by 6 cents to 60 cents in fourth quarter 24, which is the upcoming quarter again, and 66 cents to fourth quarter 25. Alright, so let's check what's going on right now. Okay, DBS currently is paying 54 cents a quarter as of third quarter 24. The yield is 4.86% based off current price, which is already spiked up, $44.40. So 4.86%. But this is a 50% payout ratio, which means to say theoretically, how much can DBS pay in dividends? They can pay 50% more. Sorry, not 50% more. They can pay double, because the payout ratio, you can go until, actually you can go beyond 100%, but you'll be paying off from cash. So, but if you look at just from earnings, right, or from profits, if you pay 100% payout ratio, right, DBS could potentially double these 54 cents a quarter dividends. Alright, so theoretically that means that they could pay $1.08 a quarter or $4.32 a year. Alright, although I think these are likely because it's very risky to pay out so much dividends. If you have a recession or your earnings drop, right, then you have to probably cut back dividends. Alright, so this is an unlikely case, but this is the maximum theoretical value that at this point they can pay. Right, UBK here is suggesting that it could rise to 60 cents next quarter, so currently 54 cents, but could be fourth quarter they will announce 60 cents, which means a 5.4% yield if you base off today's price of $44.40. If you add in 50 cents special dividends, which they suggest that it is possible, alright, total dividends for the year, right, will be actually for the next year, right, from this point, fourth quarter 24 to third quarter 25, alright, I calculated that the forward yield will be actually total dividends will be $2.90, and this represents a 67% payout ratio, right? Because I divided by this value, $4.32, which is the maximum they can pay, right? Which is more or less their profit a year, right? Yield will be at this point, including special dividends plus the 6 cents rise, 6.5%. Which is pretty impressive, right? So they clearly expect that if I rise to 60 cents in fourth quarter 24, I believe that this means that in 25, right, every quarter they will at least pay 60 cents until the fourth quarter where they think it will rise to 66 cents. So let's see whether 66 cents is feasible if you include the 50 cents dividends of special dividends, right, in fourth quarter 25, right? So I calculated again the yield. If the yield the dividends, this one is the dividends at 66 cents a quarter, this for fourth quarter 25 already, alright, then the total dividends a year is $2.62. Just based on this alone, without special dividend, yield will be 5.94% based off $44.44. If you add the special dividends, total dividends for the next year will be $3.12, and you can see that this value is still below the profit. Right, so theoretically they could pay this relatively comfortably, right, and the yield on this price will be 7%. Right, so that may be the explanation for why people are very excited about DBS currently. Right, please note that none of this, what I'm saying is financial advice. Alright, do like and subscribe if you enjoyed this video, and you can also enjoy the coverage of the companies that I have covered in this video, DBS and CLCT, the latest reports, by clicking the respective places on the slide. Right, with that, thank you for listening. Please remember now this is financial advice. Right, thank you for listening.